It is time for Money, Power, Politics. I love that name. The Federal Reserve Board has officially wrapped day one of their two-day meeting on interest rates. Now, Trump pick Stephen Miron was only confirmed to the board yesterday, while Lisa Cook has spent the last several days defending her right to keep her job. Well, on Monday, an appeals court blocked Trump from removing Cook from her post. So she was also at that meeting today. Donald Trump offered a bit of a preview of Miron's new role earlier today. Take a listen to this.
He'll have a big influence on this when too late getting his rates down, I guess. Who knows? You never know with too late, but he's done a lousy job.
For more, I want to bring in John Harwood. He is a veteran Washington correspondent, distinguished fellow at Duke University, and columnist for Zito on Substack, and Bharat Ramamurthy, who's the former National Economic Council deputy director and author of The Bully Pulpit on Substack. These are very important people with lots of great titles and lots of experience. So y'all know what is going on here. Bharat, let me start with you because Miron got confirmed yesterday, literally while, the weeknight was happening. Then we got the news about Cook and her affirming that she will also be at this meeting from the appeals court. What do we need to know? Because this meeting could usually feel a little mundane, but it feels a little more interesting this time.
It is. I think it's interesting for a couple of reasons. Number one, the expectation is that tomorrow the Fed will announce that they're going to cut interest rates by 25 basis points, which is the first cut that they've done in about a year. So that's a significant move, and it represents a shift in the Fed's posture and hopefully some relief for people who've been struggling with higher interest rates. But the independence of the Fed has been an issue with everything that Trump has been doing. For months and months, Trump has been basically haranguing Jay Powell, the chair of the Fed, to cut rates. He then tried to fire Lisa Cook, as you said, on very flimsy grounds, and the courts stopped him from doing that. The goal there, presumably, was to replace her with somebody who would cut rates as fast as possible. And then he appointed somebody who's a senior economic advisor to this role, Stephen Miron, and he took this role on the Fed while not even stepping down from his role at the White House. He's literally serving as both a White House economic advisor and serving on the Federal Reserve. So there's been a longstanding tradition of independence of the Federal Reserve. That barrier is starting to come down in this Trump term.
Well, John, we heard from the president today about the Fed's independence. Take a listen.
Do you believe the Federal Reserve is an independent body? What do you think about the independence?
Oh, it should be, but I think they should listen to smart people like me. I think I have a better instinct than him.
John, does that sound like independence to you?
No. Of all the places that you'd expect Donald Trump to turn into a reality TV show, the Fed is about the last one you would have expected, but he's done it. Both with this very clumsy attempt to fire Cook on ginned-up mortgage fraud allegations, which appear to be baseless, and this extraordinary step, as Bharat was explaining, of having his own economic advisor, at least temporarily, on the Fed. And as they make this decision, there's concern that some of the members on the Fed, Chris Waller, for example, might be politicking to become the next Fed chairman. So the specter of politics and Trump-infused politics hangs over this meeting, although everybody pretty much expects what the outcome will be on interest rate terms. We don't know yet how much damage the challenge of the independence of the Fed is going to do to the economy.
It is just so important to always remind people that what the Federal Reserve here in Washington, D.C. does can decide mortgage rates for somebody in Detroit, whether you can get a small business loan in Omaha, Nebraska, or what the grocery prices even are in Atlanta. So it affects you out there, folks. I want to take a new topic, Bharat. Retail sales, they actually beat expectations in August, despite these growing concerns about the economy that we've been talking about. Can you break down the numbers for us? Because it seems like that wealthy people are actually the driving force, or more, people who are more well off. Some of these folks might say, I'm not wealthy, I just saved it all. But that they are driving this, and folks that are maybe still pinching pennies and working 2 or 3 jobs, they are not the ones spending this cash.
Yeah, that's exactly right. If you look at the data, as you said, retail sales came in a little bit higher than people expected. That's good. It means that people are spending. Consumers are spending. But if you look at the data about the second quarter of this year, 50% of the spending that happened in that quarter came from the top 10% of earners.
Wow. 50? Say that again?
50% of spending happened from the top 10% of earners. And that means the bottom 90% is pinching pennies, as you said. And if you look at the data on wages, wage growth has been slowing down, even as prices at the grocery store and elsewhere have been going up faster than wages have. So really what you have is this unbalanced economy where the top 10% are doing well. They're doing well on wages. They're doing really well in the stock market. Remember, the top 10% of earners in the United States own about 90% of the stocks in this country. So when the stock market goes up, that's really a benefit primarily for the top 10%. They're driving the economy, but the bottom 90% of people, middle-class people, are really struggling, and you see that in a wide variety of data, and you see it in Trump's approval ratings on the economy, which are in the pits.
An unbalanced economy, but also one that's heading into a very difficult place with inflation stubbornly high while the job market weakens. And so it creates a real challenge for the Fed. How much stimulus do you provide? How much do you try to prop up the economy? Because other policies that Trump has implemented, both from the deportations, reducing labor supply, and the tariffs, which raise prices, that creates a difficult situation for inflation. And so the more you cut rates and stimulate, the more you risk restarting inflation, even more than it already is propelling. But you also got to take care of the job market and keep people employed.
It's a lot. So what will we expect from this meeting now tomorrow on day 2? I mean, obviously, everyone keeps saying they're expected to cut the rates. It's by how much will the rates be cut. But what else are they talking about in the meeting at the Fed? Because the meetings are long, so it seems like they got a lot of business.
Well, I think that what most companies and economists are looking at is the guidance they issue about how many rate cuts they expect later this year and what the path of the economy looks like. And that's a matter of a lot of dispute for the reasons we just talked about.
And I would make one last point, which is that I looked it up today. The average 30-year fixed rate mortgage was 6.13%.
Yeah, it was.
And a year ago, you know what it was? It was 6.12%. So Trump has made no progress on this key affordability issue, the cost of housing. And that high rate is keeping people locked into their homes because people don't want to sell out of their 2.5% mortgage and get a new 6% mortgage. The housing market is frozen. We're not expecting mortgage rates to go down that much, even if the Fed cuts, because they've sort of priced in the idea that they're going to be cutting. And so for me, the concern would be, are we going to get a lot of the relief that we're expecting, even if we do get these Fed cuts?
So one more topic, if I can, for you all, since I'm learning a lot here. Okay, unlike Steph, I'm not a business lady, but I know how to talk about it. The Wall Street Journal reports that Donald Trump, alongside U.S. investors, are closing in on a TikTok deal. I have always thought this was very strange because sources are saying the arrangement would create a new U.S. entity to operate the app. What do you make of this?
Well, first of all, the president's been defying a law passed by Congress.
Well, yes, because Congress did pass a law to shut TikTok down.
Exactly.
Said they had to stop, sell, or stop.
Seized the authority to do that, whether that would hold up in court or not. He seized it for now. Second thing is, it appears that the Chinese algorithm is going to continue to drive the operation of TikTok. So it's not clear that you've actually produced much of a change in what the TikTok consumer product, but what you've done is put it in the hands of allies of Trump, very wealthy allies, Oracle, Larry Ellison, at the same time that Larry Ellison's son is acquiring CBS News and making changes there. So there's an attempt by Trump-allied forces to increase their control over not just news organizations, but social media as well.